Thursday morning, it's McCollum on Business. I'm Stephen McCollum. For the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. Well, we got some big developments happening over in the Middle East on the positive side of things here on this Thursday morning, of course. Don't forget, we're going into tomorrow, Friday, being a holiday. It's Juneteenth, which means the markets are closed. So we will be off here at McCollum on Business on Friday, be back on Monday. So just a quick programming note for you, but let's not delay at all. Let's get right into that market watch. And it's a good day here, as I said, on the market overall, because, well, Fed's kept interest rates at the same, kind of as expected. We'll talk about that coming up here. The president has officially signed the Iran peace deal, at least the framework memorandum of understanding this morning. Some developments in oil prices today. We'll talk about all of that coming up. But right now, the Dow Jones, it's up to 66 points right now. It's up to 51,667 for it. And they're all trending up right now. S&P 500 is 35 points up. That's trading at the 74.75. Nasdaq's up 259 points, 26,281. Chip stocks, memory stocks, everything way up today as well. We'll talk about that coming up. And then you got the Russell 2K. That's up 4 points this morning to 29.44 as of right now. Bitcoin, well, staying in that 63, well, mid 60,000 range, but it has gone down today. It was at 65 yesterday. Well, 63,830 for Bitcoin today. And as I told you, people took their money out of Bitcoin specifically, moved it into some more generic cryptocurrency stocks like Coinbase, Robinhood, those types of stocks. But then also a lot of people took their money out of Bitcoin, moved it into SpaceX since that's come onto the market here as well. So 63,849 for Bitcoin here today as well. Stocks we're paying attention to right now, well, a lot of them making some waves. First one, Intel is what we're going to look at. You know, the big presence here in Arizona, 7.76% up right now for Intel. They are big because President Donald Trump said in a True Social post that Intel struck a deal with Apple to design and build chips in the United States. So obviously, big deal when you get into bed with Apple, and we're going to talk Apple later on in the show as well about some chip situations out there and what they're saying. That'll be at the end of this segment. But Intel's up 8% based off of that news. Apple, interesting enough, I don't have the graph for you, but I can tell you Apple's up just under 1% here today as well. So big news for Intel moving forward. Next, we'll look at a pharma giant. We'll look at Pfizer as a stock. It's down today 2.70% for Pfizer. They said its CFO, his name was Dave Denton, he said he would step down from his role on August 15th. The company did name Senior Vice President of Finance as the interim finance chief until they find a permanent one coming up. But it's got to make you feel a little bit good, right? When you resign from your post and your stock goes down 2.68%. Helps your ego a little bit this morning. And then we'll just do it because we've done it all week, right? Let's look at SpaceX. This is its first full week on the trading market. Interesting enough, it does not always go up, as what we learned yesterday. Well, today they're down 5.04% so far here on the market, about an hour into the market day. But it had a 5% loss yesterday as well, officially, for SpaceX. It was well over $200 a share after, Wednesday? Now, 181 is what that share price is as you see it right now. So 40% surge, after its debut on Friday till about Wednesday. 5% loss yesterday. Right now, 5% loss here today as well. So the shine on SpaceX kind of coming off here. Nothing to panic about. It's obviously stocks ebb and flows, but I was just kind of wondering when that downhill trend would happen as people sell off their profits, especially everybody that got in right at that IPO price of $139. Some big profits so far here on SpaceX. So there's the update here. Of course, last trading day of the week. Markets are closed tomorrow, just like we're off tomorrow as well. Because of that, Kind of a breather here on SpaceX here as this week comes to an end. Later on, when we come back and look at stocks, we're going to look at Accenture, which is a professional services company. We're going to look at Smith and Wesson, and then we're going to talk a little bit about cruise operators, airlines, and what they're doing today as well here on the market. Now, I told you earlier, well, just really quick on the market, right? Nasdaq's way up, but we talked about Intel, right, being up because of that, struck a deal with Apple. That has meant that chip stocks in general all are kind of all up today as well because of that announcement, and Intel's up. Memory stocks also up today between 3 and 5% on average for Western Digital, SanDisk, and those companies all kind of moving higher here today based off of that Intel announcement with Apple. Sympathy with that company there as well. So chip stocks, memory stocks, all up because of a large portion of it due to that Intel announcement earlier as well. So industries moving up, and that's why Nasdaq right now 305 points up for the Nasdaq right now. And then get into the stories you need to know. We'll stay national here in the United States first, and not a surprise, but the Federal Reserve did yesterday announce that it was holding interest rates steady, and they blamed it all on, and they said the concerns about elevated inflation all around this war in Iran out there as the main reason why. Of course, this was the federal chairman's Kevin Warsh's tenure, first meeting leading the central bank here. Federal policymakers voted 12 to nothing to leave the benchmark. Federal funds rates unchanged at its current range of 3.5 to 3.75%. This move follows the central bank's decision to hold rates steady in January as well. I'm sorry, January. I think it was March and April were their last meeting timeframes. So no movement here so far this year. Don't forget three successive 25 base point rate cuts last year. At the end of last year, what was it? September. I think it was October and December were the three cuts last year. They did release a summary of economic projections, which is that dot plot you hear a little bit about. Now it showed that, which is kind of what the way the voting guys are thinking, the gals and girls are thinking out there. It showed 9 of the 18 voting members actually project an interest rate hike before the end of 2026. Six, they're projecting 25 basis point hikes coming up by the end of the year. That's kind of the voting people on this board thinking of what's coming up on the dot plot here. Now, a lot of that could change. The Iran war ending, right? Inflation could start to come down a little bit with energy prices dropping here, but that's what they're thinking as of the meetings yesterday. They do see PCE inflation. They say it's going to get to 3.6% at year's end. That's up from 2.7% in the March projection. Yeah, they say the unemployment rate will be at 4.3%, which is slightly lower than the prior estimate in March of 4.4%. They also see economic growth actually slowing here in the United States. The projection showing real GDP up 2.2% at the end of this year. The prediction before in March was about 2.4%. So they're actually thinking there's going to be a slowdown in this economy coming up. Like I said, the thing that rattled this from the March projection, well, the war in Iran. What could rattle it again to the positive? The end of the war in Iran coming up here. So, came out of that Fed chairman meeting yesterday. We also learned that Mr. Kevin Walsh's tenure here, he's not going to be the pushover to what Donald Trump wants, is what we learned yesterday as well. He kind of went against what the president wants out there here in his first meeting. Oil prices, they have declined here today. President Trump signed that deal with the Iranian counterpart to end the war in the Middle East and open up the Strait of Hormuz as well. The International Energy Agency flagged a supply gut next year. Yes, we have a supply issue that could be solved there if ships start flowing quickly. International benchmark Brent crude, well, this morning, the futures for August, it dropped about 1%. It's at $78.64 a barrel. The West Texas Intermediate futures for July fell 1.7%. It's at $75.46 per barrel this morning, as of at about 20 minutes before 15 minutes before showtime where I got those numbers. Now, President Trump signed the deal, and then Trump told reporters that he would resume attacks on Iran if they failed to honor its commitments. So he always throws that little cloud in there that muddies it up a little bit, right? Now, the International Energy Agency, well, they expect a resolution of the conflict will result in significantly higher supply volumes and actually spark a major oil overhang next year. There's shortages out there, and we'll talk about that coming up. Global supply, it's expected to drop by 3.9 million barrels per day on average in 2026 as well. Now they say it'll recover next year as well, but they're doing the monthly oil market reporting for that agency out there. We got an update on supplies coming up in just a couple stories. But this morning also, if you're driving around, need to fill up? Well, U.S. gas prices are officially on average across the United States. It's below $4 a gallon this morning, just barely on average, below $4. But it's the first time since March that the average cost for a regular gallon has been that low. Prices, of course, are falling overnight as President Trump signed that agreement with Iran. Now, there's still some debate here, but we know the war's over. We know the Strait of Hormuz is opening for at least 60 days now. Gas prices on average in the United States is at $3.99 on average. That's according to AAA. The drop below $4 follows a 15% decline in the price of U.S. crude oil this month. Fluctuations in gas prices are still out there, of course, right? California, if you're going on vacation here, like we're headed over to San Diego for the July 4th holiday this year again. Well, gas prices over in Southern California are averaging $5.64 per gallon. You're going the other way to South Carolina, it's $3.58 per gallon over there. So, it fluctuates, depends where you're at. If you go down to Tucson, it's cheaper down there than it is up here in Arizona or in Maricopa County as well, here in Phoenix. So that deal, meaning gas prices, are officially, at least nationwide, going down. But then here's the other side of it. We talked about the IEA saying there's a shortage out there, global supply shortage. That should get better now that the war is over and a sustained war ending. But now we know crude oil stockpiles across the country here in the U.S., they continue to plunge. Yeah. Now, the Trump administration tapped the backup supply of energy products to help keep gas prices down while the Strait of Hormuz remains shut to vessel traffic for the most part. So they've been draining that stockpiles, and it's caused the U.S. Strategic Petroleum Reserve. Now, the two that are in Louisiana and Texas, or the one that's in Louisiana, the one that's in Texas, it's fallen to its lowest level since 1983. This is all from the Energy Department. They issued all this reporting earlier this week. Inventories held at a second crucial oil hub over in Oklahoma. Well, it tumbled to just 20 million barrels as well. That's low numbers. So the country's largest commercial storage facility is now at an operational stress level, according to the Energy Department and their reporting. Obviously, oil oil across the United States, we don't get very much oil from the Strait of Hormuz, but the global market's been strained. We've had to kind of prop up other markets and things to that effect. But we know this that the Iran war since February 28th, U.S. oil refineries have been processing petroleum and selling it to the open market. But they're not doing it, they can't do it at enough of a rate to make up for the lack of that Persian Gulf supply. For instance, last week, domestic refineries were running at a 96.7% chance of their operable capacity. That's huge numbers. But the reserves still dwindled because the supply, they cannot produce enough to match the supply that's out there with the Persian Gulf levels being dropping with what's coming out of there. During the second week of June, commercial stockpiles of crude oil fell 8.3 million barrels. 8.9 million more barrels were drained from the Strategic Petroleum Reserve. 10th straight week of declining U.S. reserves as of the second week of June. So now, with this ending, Strait of Hormuz opening up, those reserves built back up as well from these dangerous levels. And we told you a couple weeks ago, a bunch of analysts were signaling alarm of the amount of reserves that were dwindling down, and that which would obviously cause prices to shoot up if there is no reserve at the end. So hopefully, with these signals here, it kind of ends as we move forward. Now let's get out of the global oil situation and the markets there, because hopefully that gets better for us as the oil starts flowing through the Strait of Hormuz again and everything. But let's get into some stories around the United States. And there's a poll done, and it was released yesterday, and it found that most U.S. families have both parents working full time jobs. I don't think that's necessarily surprising to a lot of people out there. We all know a lot of people are working full time these days, or at least trying to. The Pew Research Center gives us this reporting, though, and they found that as of 2025, 52% of mothers and fathers in different sex relationships with children under 18 did both work full time jobs. Now, we get this from the U.S. Census Bureau data, is where they found that information and reported it out. That's up from 31% in 1975. So, big jump here since 1975 as well. 52% today, 31% back in 75. 23% of families have a father working full time while the mother is not employed. That's down from 42%. These big drops in numbers in 1975. Researchers found that parents in this situation are more likely to see it as a positive for their children's well being, where one works, father works, mother does not. Among respondents where both parents work full time, 83% said the arrangement was overwhelmingly positive for their family's finances. 19% of respondents where the father works full time and the mother is not employed reported the situation was positive for the family's finances. You can kind of see the conflicting numbers here. Now, it does differ to the well being of children in terms of that perception. 85% of couples in which their father works full time and the mother's not employed, they say their arrangement has a positive impact. It's less positive among family arrangements where both parents work. Only 49% say there's a positive impact on their children's well being from that number. Pew found that 60% of black mothers and fathers, either married or living together, work full time, which makes a slight decrease from 64% in 2000. Then there's the Hispanic couple reporting where both the man and woman work full time. It's mostly plateaued since 2000. It's stuck there at 45% compared to 44% as of 2025. Asian families saw more mothers and fathers both working full time at 52%. That was 45% back in 2003. That was the first time that they were Asian Americans were included specifically in that population study. The Pew survey was conducted March 2nd through the 15th, and it included 2,242 respondents in that study. And we're seeing, obviously, I don't think, like I said, I don't think it's a shock that we're seeing that kind of a switch. I just assume most families these days, everybody's working. Maybe not both working full time, but definitely one working full time, one part time out there. Um, I think that's the majority of people here, what we've been dealing with lately as well. And then, folks, this is the story I was telling you about. Brace yourselves. Walmart a few weeks ago signaled price increases. They weren't able to keep eating the price differences with some of their raw materials and their costs, and they're going to have to start passing them along to consumers. Well, now Tim Cook here, right? Outgoing CEO of Apple on September 1st is when he is out. And now he's out saying, Apple customers, you may have to pay more for your favorite devices because Apple is facing those soaring costs for memory and storage chips with those shortages due to AI. The tech giant's CEO, as I said, Tim Cook, is outgoing here on September 1st, but he told the Wall Street Journal that Apple has tried to absorb the increases, but he says they can no longer fully protect customers from dishing out higher prices. He did not say when prices would rise or which products would be affected, but we all know Apple's next major product launch is expected in September. They're going to unveil probably, the new iPhone lineup, which new Apple Watches are coming out, computers, etc. There's no make no mistake about it. He's floating this possible price increase number now. because of the September lineup coming up that they're going to do. Now, it's all stems around artificial intelligence companies are buying up those huge amounts of memory and storage chips, and it's affecting those markets and pricing, of course. Research firm Tech Insights estimates Apple would need to add about $270 to the next iPhone Pro model in order to maintain its profit margins that it currently has. So instead of, I don't know, what are they now, $1,300? So they're saying these could go up to $1,600 just to keep current profit margins. Now, which RAMs and which issues, which products are the issues for these companies in terms of not being able to get them in because of availability and pricing? Well, Tim Cook said DRAM chips are a key concern. More of them are now being used in the AI servers, and that's the main chip there for memory storage here for most of Apple's products. Now, Apple did say also it could use its cash reserves to help expand chip supply, but the company does not plan to build its own memory factories. They'll just use their cash here to spread it out there and expand out and get people to, get more availability of these chips, which of course will drive down pricing as well. So Apple's signaling price increasing here. Make no mistake, it is June, what is today? June 18th? Yeah, they're doing their new rollout here coming up in September. There's no mistaking why they're announcing it now coming up. The other nice thing about Tim Cook doing it now is he signals it could be coming, then he's out. The new CEO will have to announce price increases in September with that meeting. So another strategic move by Tim Cook. I am 100% sure. Hey, appreciate you joining us here on this Thursday edition. Here, last one of the week, because tomorrow is a holiday and the markets are closed. But hey, we'll keep it rolling here. We got some other stories come up. Are your adult children still living with you? Well, it's happening more and more out there. We'll give you those studies as well. A couple local stories. Ethan says Apple has slowly been making price increases in the past year as well, is what he is saying. But not in the big amounts, right? It's lower amounts, but it's all based around those memory prices. Technology and everything just keeps getting more and more expensive. Folks, when we come back, those local stories, a couple stories on your kids living with you a little bit longer. A lot of fun stuff coming your way. So come back and join us. Call them on business. And we're back here, McCollum on Business Thursday edition. As we've told you, tomorrow we are off. It is Juneteenth, and markets are closed here on Friday. So we won't be here tomorrow. The whole studio is going dark tomorrow, including the main event. But we'll be back on Monday here to get you going, 7 a.m. Get you updated on the 3-day weekend, at least in terms of markets here as well. So come and join us on Monday. But just because the studio's dark tomorrow in terms of live program, everything is on demand, of course, on YouTube and over on Rumble as well, including, even though tomorrow's Friday and the studio's dark, The Real Matrix will be out tomorrow at noon, like normal, over on Rumble, rumble.com/user/TME Media. And then, of course, on the free podcasting system. New episode tomorrow. Even though all the live programming is dark, that'll be up at noon tomorrow as well. Later on today, you'll have the main event. Excuse me, we'll have the main event, but you also have the pit stop coming your way. San Diego Naval Base Race this weekend. We'll look back at last weekend's racing and ahead to, well, what do we know to expect this weekend? New track, new idea, kind of a lot of unknowns this weekend. We'll fill you in as best as we can, but it's going to be a fun weekend around the naval base over there at Coronado. Catch the pit stop later day. It's usually up before 2 o'clock here, YouTube, of course, TME Media AZ, and over on Rumble. As soon as we're done here, we get this up on demand as well. So if you can't catch us live, well, catch us on demand, YouTube, Rumble as well for this show. We go right into the main event. Today, Uncle Lou comes in. Of course, historic White House fight card in UFC last week. We'll talk to Lou about those 7 fights. Of course, look ahead to the Meta Apex this weekend. Next weekend for July 4th, or coming up in a couple weeks, they're off here, but we have an off week coming for UFC. But of course, we have the college baseball. We know the final 2 teams on the College World Series, and hockey has wrapped up. So Uncle Lou coming today with a wealth of knowledge, folks, here from 9 to 10. Me and Dale Hellestrade will get you started with the show, of course. Catch us live 8 to 10 here on TME Media on YouTube, or, of course, on demand on YouTube or Rumble as well. Catch us there for the free podcast systems for every show. Well, except for this one out there. They all have their own social media. The Pit Stop Talk for the Pit Stop, TME Sports Show for the main event, the Real Matrix. No social media for that, but of course, free podcast systems out there. With all that being said, folks, let's get into the last market watch for us of the week. And it's a good day, right? Wall Street's trying to rebound from the Fed-led sell-off that happened yesterday, meaning the rate staying the same, etc. Out there. Chips are higher, both chip makers, memory stocks. We told you that. Dow Jones right now 95 points up, 51,699. The S&P 500 is up to 42 points to 7483. The Nasdaq's up 275 points with all those chip stocks shooting through the roof, 26,297. Then you've got the Russell 2K up 11 points right now to 2951. Bitcoin, well, hanging out here in the mid 60,000 level, 63,801 for Bitcoin. As I've told you here, at least everything I'm reading about Bitcoin right now is everybody was taking their money out of Bitcoin, putting into more generic cryptocurrencies like Coinbase and Strategy, for instance. But also, a lot of people taking revenues and profits out and moving those over to SpaceX with its IPO. So that's why it's still hovering in that mid 60,000 range for Bitcoin. Is this going to be the new more normal as SpaceX has kind of changed the market as we know it for the cryptocurrencies? First stock we're looking at right now, Accenture. They're a global professional services company, and they're down big today, 14.60% right now. Following the announcement, it did agree to acquire an asset intelligence company called Run Zero. And so what they're doing is it's a device and software supply chain security company, Natrice as well. So 2 companies they're buying. Their stock is down 14.80%. They also, besides buying those 2 companies, they announced a majority stake in Dragos, which is a cybersecurity company. Accenture making some big moves today. The combined deal with all 3 companies, the 2 purchases, and then the majority stake in the other company, the deal's valued at about $4.175 billion. Accenture down 14.65% based off of that news today. Now let's go to a gun maker out there in Smith& Wesson. Yep, 21.19% up as of right now for the gun maker. They reported an earnings and revenue beat. They said its handgun sales to sporting good retailers actually jumped 23% year over year. Handguns, by far the biggest selling unit of Smith& Wesson. 80% handguns were shipped out by Smith& Wesson. as well. So, in that quarter alone. So handguns are being sold, folks out there. Make no mistake about it in the market. Now we don't have any graphs for this stuff here. I'll just tell you, cruise operators are up today. Falling oil prices, obviously, airline stocks also up, all based around the falling oil prices below $80 a barrel, $78 here this morning, and continuing to fall with the signing of that deal. Now we're still above what they were before the war, right? $60 a barrel in that range, 60, 65. So we're still about 10, 12, $15 above the pre-war levels, but the numbers are dropping. So cruise operators, airlines, stocks benefiting today based off of those oil price news as well. And I got a couple stories here that some of you might be experiencing this right now as well, because a third of 18 to 34-year-olds still live with their parents last year. It's a reflection, obviously, of how high price housing costs are making traditional young adult milestones, those things like independent living, well, it's harder to achieve for these, especially the younger kids out there. The figure is little changed from 2020. That's when the pandemic, of course, upended normal life, and the percentage of young adults living with their parents spiked to a record in 2020 of 33.6%. Realtor.com gives us this analysis, and they got the information from the Census Bureau. 5 years later, here, 2025, 33% of young people, that's a record 25.2 million young people in all, remain in their childhood homes. Things like high rent and home prices, they're likely going to keep them there as well. Since 2019, the median U.S. home list price has risen more than 34%. It's up to 430,000, and median rent is up about 18% to $1,673. Adults who have yet to leave the nest are often depicted right as lazy, unemployed, no personalities, those types of things. But in reality, most of them have jobs. A sizable portion have actually graduated from a 4-year college degree, and they even have good paying jobs, folks. Unemployment rates are similar to the 2000 levels right now, and college attainment is higher. More young adults are remaining at home, to keep those expenses low as well. If you want to just look at last year, 1 in 7 employed adults in their late 20s still lived with their parents, up from 1 in 9 at the start of the millennium. Today, nearly 5 million more young adults live with their parents than would be expected had early 2000 rates of parental co living held steady. Most young adults who still live with their parents are under 24 and in the earliest stages of adulthood. So I don't have a problem if you're 18 to 24, 25 doing it. When you get into the 28, 29, 30 range, more than 4.5 million 25 to 29-year-olds remain at home, along with 3 million 30 to 34-year-olds. You better be taking care of your parents at that point, in my opinion. Yeah. Unless you've had bad luck in life and something bad's happened to you. That's a different scenario. The share of adults in their mid to late 20s who still live with their parents, it's fallen slightly from recent peaks, likely because some of the uh, cohabitation now, the people that in their now late 20s managed to buy homes or more affordable rent back in 2020 or 2021. Obviously, that was before the prices began shooting up. But the share of 30 to 34-year-olds who remain at home, it's risen, a sign that young people are struggling after missing that window of the better affordability back then. Rents and home prices obviously remain high. We know that. Affordability is beginning to improve by some metrics. Median rents nationwide, they've been falling for nearly 3 years. Home price growth has slowed in much of the country, giving incomes more time to catch up and get some savings in there to move forward and things. But there you go, folks. A little bit of a number for you out there. Might be experiencing that or knowing people that are experiencing that. Hey, now, if you want to back to school shopping, you have another option here and another, I guess we could say, foray into another area for a company named Hollister out there. Now, Abercrombie& and Fitch owns the Hollister brand, and they're branching out of its apparel roots, and they're actually going to be easier to find because they're partnering with Target. They're going to start selling home and dorm decor for the first time. Both brands look to new categories to drive growth within their stores. So it's a collaboration between the two companies, and they're calling it the Hollister Collection at Target. It will launch online. Most Target stores and select Hollister locations will be rolled out into on June 28th. It'll feature about 60 items across men's and women's apparel and beddings. Hollister's tie up with Target comes as both companies contend with declines in discretionary spending and, of course, waning consumer confidence out there in the market. Retailers are having to get creative to entice shoppers to come into the stores and spend some money. So Hollister, if you don't know that brand from Abercrombie, it targets shoppers, no pun intended, ages 13 to 22. They've been comfortably growing for much of the past year, but they obviously want to become more of a lifestyle brand, more than just a company that just sells clothes. By offering a wider assortment, especially across a larger footprint, Hollister is looking to acquire new customers, encourage existing shoppers to spend more, and even create a new pipeline for growth there within their company. And then you got Target, right, for this collaboration. They already have a large home and dorm decor department, but Target's always leaned on brand collaborations as a competitive differentiator, right? Their Target's not as known as common as Walmart is across the homescapes aisle. Walmart's better known for that. So they bring in these collaborations and stuff. Kendra Scott, Diane Van Fustenberg, Bombas, Champion. Yeah, Target's obviously using that angle to bring more people in. So the collaboration offers access to the lucrative back to college shopping market, folks. These numbers are shocking. It reached $88.8 billion last year. So about $1,325 in spending per person that participates in that annual ritual of dorm shopping, etc. out there. Within that market, spending on dorm or apartment furnishings has been steadily growing for more than a decade. In 2025, it reached 12.8 billion, second only to electronics or computer-related equipment in terms of sales. So, back to school home shopping is huge. Target and Hollister wanting to get more involved in that. And hey, have you ever wanted to sit on an airplane for an unbelievable amount of time and not be able to get off? Well, we've got a flight for you. Qantas is planning to launch. What they are claiming, and I haven't seen official on this, but it's going to be pretty close to the world's largest nonstop commercial flight. It's launching in October of 2027. You'll go from Sydney, Australia to London, a 22-hour flight that you're in the air. Yeah, Qantas, of course, an Australian airline service. They announced yesterday that nonstop flights between the two cities will begin operating, and all part of its long awaited project, Sunrise Initiative. It aims to connect Australia's East Coast directly with major global destinations, obviously, starting with London. They unveiled the first of this specifically configured Airbus A350 1000 ULR aircraft. It was debuted and unveiled, I should say, at Airbus's manufacturing facility outside of France. The aircraft has been modified for ultra long haul travel. It includes an additional 20,000-liter fuel tank that allows it to travel more than 16,000 kilometers. That's about 10,000 miles nonstop. The Sydney London route will become the first nonstop service between Australia's East Coast and the United Kingdom, and the flights will reduce travel time, believe it or not, because of no layovers by as much as 4 hours as well. The launch marks a significant milestone for Project Sunrise and Qantas. This is the initiative first announced by Qantas back in 2017. Qantas has always wanted to push the limits of commercial long haul travel and just get you to your destination at a bigger and faster time. Now, they specifically made this aircraft, the A350 1000 ULR. They were designed specifically for the project. It'll carry 238 passengers across four cabin classes. The airline plans to take delivery of 12 of these aircraft. So it kind of tells you how they want to spread out what they are doing out there as well. Now, some local stories here, at least in Arizona, and this is the case across the country. but we have official numbers here from the insurance side of things. Arizona home insurance rates rose 71% over 6 years. They say it was due to natural disasters and inflation reasons. How many natural disasters do we have here in Arizona? Right? We get punished for things that happen in Florida and California with the wildfires, etc. Yeah, we do pay here in Arizona slightly less than the national average for the insurance coverage, but these price hikes since 2020 have been 71%. According to this new report from the online insurance shopping tool Lending Tree, home insurance rates in the state rose 71% over 6 years, the sixth largest increase in the nation over that period. Yeah. Increase in natural disasters nationwide means our rates here go up for some reason. The U.S. saw $138 billion in weather disasters between 2020 and 2025, and that's according from data from the National Oceanic Atmospheric Administration as well. That's around 23 events per year. The historical average since 1980 has been around 9 events per year. So big increase, right, in those natural event sides of things. But here in Arizona, obviously northern Arizona specifically, wildfires are a big issue. We haven't had any big disasters here in Arizona like the Palisades over in California. Nothing that bad in a while, but California's events affecting our rates here because they're going, oh, that could happen here as well. So Arizona homeowners pay an average of $2,225 annually for home insurance. The national average, as I said, we're just below the national average. It's 23.95 at that point as well. So um shop. Shop around your insurance rates. 71% on average increase is ridiculous. And don't get me started on insurance and what a scam it can be out there as well. Thing. So my recommended to you? Well, one, leave State Farm. They're the biggest ripoff. I know because I have them on a lot of houses. I'm sure a lot of them are the same out there. But of course, shop around your insurance rates, folks. You find better deals out there and just the same amount of coverage, or sometimes better coverage for less with some of these smaller companies that aren't just all about the bottom lines. And if a disaster happens in Florida, why do my rates have to go up? Ridiculous. 71. Hey, sorry to leave you on that bad news out there. The positive to take out of it is shop it around, folks, and see what is out there as well. Autumn, chime in on the chat as well on YouTube. TME Media AZ says adult kids living with their parents. I don't know what you're talking about. Think you can get that sarcasm there from Autumn. Is she downgraded her house? I'll just tell you guys a little behind the scenes. She actually downgraded from a bigger place into a smaller place because her kids were older. Then they moved back in. Couple moved back in. The way the world works these days, especially according to that Pew study we talked about just a few minutes ago as well. Hey, coming up next, main event, 8 to 10 o'clock with Uncle Lou today. Join us live here on TME Media, AZ on YouTube. Can't catch us live, catch us on demand later in the day. Share us with your friends. We'd appreciate it. Have a great weekend. We're off tomorrow, of course. There's a national holiday. And we'll see you guys on Monday, 7 a.m., folks. Have a great Thursday afternoon and a great weekend. Great Father's Day, everybody. See you on Monday.